Welcome back to the deep dive. Today we're doing a bit of a structural analysis, really digging into India's next-gen digital finance vision. This is based on those recent RBI announcements from Governor Malhotra at the Global Fintech Fest.
Yeah, and it's less about small tweaks, isn't it? It feels more like a blueprint for, well, a whole new architecture.
Exactly. So we've kind of synthesized this down to what we're calling the U factor. It seems to revolve around three big structural things. This new Unified Markets Interface, or
Yeah,
UMI,
or UMI.
the account aggregator framework getting bigger, and then the digital rupee, the CBDC, becoming, genuinely programmable.
That's it. At the core idea, if you boil it down, seems to be that the next wave isn't just inclusion anymore. It's this mix of tokenizing assets, really integrating data, and leveraging AI.
Okay, let's start with UMI then. Unified Markets Interface. We all get UPI for payments, but UMI for markets.
Right.
What's the fundamental shift there? What does it actually let us do?
Well, the really big thing UMI brings is a proper framework for asset tokenization. So taking traditional assets, your shares, bonds, maybe even gold, and turning them into digital tokens on a ledger.
Okay, like digital certificates of ownership?
Sort of, yeah. And this immediately opens doors for things like fractional ownership, makes assets way more liquid, and potentially allows for global trading much more easily. Plus, you get transparency, faster settlement, that kind of thing.
Right, settlement. That's key, isn't it? Tokenization is great, but you need that quick final confirmation. How does UMI actually achieve that near-instant trading?
Okay, that's where the CBDC comes in. But specifically, the wholesale CBDC.
Wholesale, okay. Not the retail one I might use.
Exactly. Think of wholesale CBDC as like digital money just for banks and big financial players.
Yeah.
UMI uses this for settling the trades between institutions. It basically bypasses the old, slow clearing systems.
Got it. So tokenization plus wholesale CBDC equals instant digital asset trading. Makes sense.
That's the core mechanism, yeah.
Okay, so shifting gears slightly. From asset exchange to data exchange, we hear a lot about digital public infrastructure, DPI, driving financial inclusion. The account aggregator framework, AA, seems central here.
It really is a cornerstone. AA is all about giving you, the individual, the control, control over safely sharing your financial data when you want to. And the scale is, well, it's pretty staggering.
What are the numbers looking like now?
The latest figures mention 160 million accounts linked up.
Yeah.
And it's processing something like 3.66 billion data requests from about 650 regulated entities, banks, lenders, fintechs who need that data with your permission.
Wow. Okay, that's huge. But are there like roadblocks? What needs to happen for AA to really hit its full potential?
The governor pointed to two main things, really. First, integrating more kinds of useful financial lingo, not just the basics. And second, making sure all those 17 different account aggregators can actually work together seamlessly. Interoperability.
Right, so standardization and broader data scope. And we've seen this kind of data integration work well already, haven't we? Like with the Unified Lending Interface, ULI.
Absolutely. ULI is a fantastic example. It uses that AA data to help people get loans, especially if they don't have a long credit history. The impact is real. Something like 3.2 million loans sanctioned, worth 1.7 trillion rupees.
That's serious impact. Okay, so finally, let's touch on the retail digital rupee, the e-Rupee. Adoption seems to be picking up 19 banks, 7 million users, and it works with UPI, which is smart.
Yeah, the UPI link is crucial for adoption.
But the really fascinating part, I think, is the programmability aspect. What does that actually mean in practice?
This is where it gets really interesting for things like government subsidies or specific transfers. Programmable money means the sender can build rules into the money itself.
What are the examples?
Well, the sources mentioned Gujarat's GSFL scheme. The digital subsidy they give out can only be spent on approved farming supplies. The money itself enforces the rule. And another one in Andhra Pradesh for LPG subsidies. Same idea. Restricted use.
So it's instant, trackable, and ensures the money is used for its intended purpose. Cuts down on misuse.
Exactly. Less leakage, more efficiency. And they're not stopping there, right? They also launched those four related products.
Right, things like AI for UPI help.
Yeah, an AI chatbot, basically, using a small language model to answer payment questions instantly. And IoT payments using UPI, letting devices make payments, plus Banking Connect and UPI Reserve Pay. It's all about making the ecosystem smarter.
So bringing it all together, the big picture emerging is that India's next financial chapter rests on these pillars. Tokenization through UMI, smarter data sharing via AAA and ULI, and this programmable CBDC.
It feels like a convergence, doesn't it?
Yeah.
Tokenization, data, programmability, all coming together.
It does. Which leads to a final thought for you, our listener, to maybe ponder. If your financial assets like shares or bonds can be instantly tokenized and traded, and if money itself can have rules programmed into it for settlement or spending, what does that combination mean for the future? Think about personal savings, automatic budgeting, or even setting up complex investment rules that execute themselves. What possibilities open up then?
Definitely something to think about.
Indeed. We'll leave you with that until the next deep dive.